Good morning. This is Rob McDougall with Zhang Financial here with your economic update. Today is Monday, September 30th, 2024. So last week we had a series of economic releases that on the whole were really good. So most of them positive, just a couple negative. We'll go through each of those before we take a look at how the markets reacted to it. So last week we had, on the positive side, we had new home sales exceeding expectations. As well, on Thursday, we had durable good order and durable good orders ex transportation. Both of those metrics beat consensus estimates, stronger than expected. Then, same day, initial jobless claims is something we've been tracking very closely now. Came in much better than expected. The expectation was 225,000 new claims. It came in at 218,000. Last Friday was the huge day in terms of economic data. And most of it was good, offset some puts and takes. PCE, price index, that was exactly as expected. It was a positive 0.1% month over month, which was the consensus. However, the core PCE index was expected to be up 0.2. It came in at 0.1. So again, that is very favorable for inflation. Also for inflation, both personal income and personal spending, these were negative metrics, but if you're worried about inflation, they're actually positive. Up is down in this world. So personal income actually came in at 0.2% month over month. The consensus estimate was a positive 0.4. Likewise, personal spending, you normally like it higher than lower, but it was expected to come in at a positive 0.3% month over month in August, came in at a positive 0.2%. Lastly, in terms of economic data last week, the Michigan Consumer Sentiment Index, that was also favorable. So the expectation was it would come in at 69.3, actually came in at 70.1, so slightly better. Also, last week, in terms of economic activity, the Atlanta Federal Reserve, which we check in with every week, this is, I think, pretty impressive. So a lot of consternation over the economy, labor markets in particular, Fed cutting rates. So how is the economy actually doing? Well, the Federal Reserve Bank of Atlanta, they actually took up their estimate for third quarter GDP, which ends today, September 30th. They took it up from 2.9% to an estimate of 3.1%. So by the Fed's estimation, Atlanta Fed, the economy is doing very well. Inflation expectations. Now, this spiked up a couple of weeks ago. And it has really kind of settled out. So the expectation now over the next 10 years, inflation to average 2.15%. That's pretty solid. The next Fed FOMC meeting in November, the expectation now of a 50 basis point cut then is 41%. That's down from a week ago, which was at 53%. So investors are now taking a little bit of the bets off the table in terms of how aggressive the Fed will be in terms of cutting rates between now and the end of the year. So by the end of the year as well, the odds of 3 more rate cuts from where we're at right now, that now stands at 67%, but a week ago, that was at 76%. So let's take a look at the returns, how the market responded to this news. Yeah, hardly any movement really anywhere. So S&P 500 was up a solid 0.7% on the week. Nothing to really speak of in terms of mix between growth value, small, large. International markets actually up more than the U.S. markets, which hasn't happened much this week or this year. Developed markets ex-U.S. up about 3.3%. But the big winner last week, and a huge surprise, the returns out of China. China stocks last week were up 17%. That's the best week for Chinese stocks since 2007. It comes on the heels of the Chinese government making specific changes to promote growth in the country. They're having some economic challenges in terms of not hitting the growth rates they used to, some debt issues. So the government lowered interest rates. They also lowered mortgage rates, lowered the amount you needed for a down payment, made some other changes, and investors applauded that very strongly. Again, Chinese equities up 17%. in 1 week. So for the year now, Chinese equities are nearly at parity with the S&P 500. So in terms of fixed income last week, there was almost no change. The 2-year was down 5 basis points, the 10-year up 2. The Bloomberg U.S. Aggregate Bond Index, which we always reference, was flat on the week. So before we talk about the economic data that's coming out this week, probably the biggest thing potentially for this week is a potential strike for the International Longshoremen Association. So that is dock workers from Maine all the way down to Texas, and it could have a very significant impact on the economy, probably would in the short term. So if there's no deal struck, midnight tonight, I believe, is when they will go on strike, and if so, that will definitely cause some disruption. So in the short term, there's really not much of a fix. We'll end up seeing probably some price spikes on certain items. In the couple of week period or so, you'll see freight likely getting diverted to the West Coast and by air. So it'll have less of an impact, but just a heads up on it. So if the strike does occur, probably means some short-term disruption in terms of goods that are delivered, and probably will hit the markets as well. So other than that potential strike, other news that's coming out this week, the JOLTS job opening, that's going to come out tomorrow. And this is a metric that we just haven't followed in the past because we didn't think it was that relevant. It's job openings. At one point 2 years ago, it was over 12 million job openings. That's decreasing every month. So the expectation for the month of August is that we will end up with 7,000, just under 7,700,000 job openings, and that would be roughly flat with the month before. Initial claims coming out on Thursday. Again, this prior week was 218,000. Expectation is it'll be close to that at 220,000. So the real economic data that might move the market is going to be this Friday, and it does promise to be big. Non-farm payrolls, that is the biggest one. So this is the one that set everything in motion as we missed the number 2 months ago. Non-farm payrolls for the month of August came in at 140,000 jobs added. That's exactly the consensus for the month of September, again, that will be reported on Friday. Unemployment rate has been at 4.2%. That's not expected to change. It's kind of a spurious number. Wouldn't be surprised for it to move up or down 10 basis points, even if non-farm payroll hit exactly the consensus estimate of 140,000. So 2 other metrics that get reported at the same time, average hourly earnings, month over month and year over year, and the expectation is that's going to come down a little bit. So we'll just speak month over month. For the month of September, average hourly earnings are expected to increase by 30 basis points. The month of August, they increase by 40 basis points. So year over year, that would equate to a 3.8% increase. Well, that's it. That's a wrap up for the economic activity to come this week, last week, and the markets as they performed last week. So we thank you very much for your attendance. We'll look forward to seeing you next week. Thank you.